go through the same 9 pairs every day of your life. It all runs together. But remember that we're looking at clues here. At the time, we were looking at equal highs, and we did our little story, right? We're looking at equal highs, and we're looking at higher lows, right? For our last one being a hold right here. Now we're breaking to the upside. Now the problem, we said we don't have a clear breakout to the upside. We do have little areas of structure right here. For me, I want to see us clear this level. If we can clear 133 even, 133.05, it's smooth sailing up to this level. So on my personal radar, I'm looking for a break and close above here, and then a move from 133 even to about 133.50. Obviously a little bit of a pullback in there. But again, we can bring out our volume and see how important is this level. When we do so, we're going to see that it is important, right? Hence the reason why I'm waiting for that level to be broken. So again, this gives us an answer to sometimes those questions where it's like, should I pay attention to this or shouldn't I pay attention to that? And in this case, it's like, hey, I know I should. Maybe I don't necessarily want to involve myself in a bullish move right here in a breakout because we're breaking out right into a battle zone. I want to wait till this battle zone is clear to get a full picture, right? But if we can clear that zone, and for me, it's going to be a little bit higher, that structure level, like I mentioned before, certainly think we can push up there on the loonie here. So with that being said, we're also due to see some relief, right? And this is a good area to look for some relief, right? So again, trend continuation and counter trend traders looking at the markets the same way, just for different execution reasons. Identifying that same zone. If you're a TCTer, you're like, oh, let me get a break of that so we can continue higher. If you're a counter trend trader, you're saying, hey, what happens if we hold? And we've made a straight shot from 131.5 to what's looking like it may be 133 even. That's a big move, guys. That's a big move. You can see our RSI is at a whopping 90. Again, the RSI is the relative strength index. It is not the reversal strategy indicator like I thought at the beginning of my career. Was anyone else thinking that? Is anyone else not afraid to admit it? I thought it stood for the reversal strategy indicator. Because everywhere I went on the internet, everyone just spoke about the RSI being like, oh yeah, it goes overbought, then you sell, and it goes oversold, and you buy, and it's that simple. Make money, right? And I was like, this is awesome. Right? It is the relative strength index. So it tells you how strong the market is, the momentum is in the market. So the higher that number is, the more strength of the move. And here's the thing. It's harder to, it's like all oscillators, right? That have like a 0 to 100 mark. It's the closer you get to the ceiling, the harder it is to reach the ceiling, if that makes sense. So it's easier for the RSI to go from 40 to 60 than it is from 80 to 90. Does that make sense, guys? So to get to a number like 90, it takes a massive amount of strength, right? Now, I don't know if you've ever lifted weights or done anything intense, but when you exert a massive amount of strength, at some point, you need to take a break. At some point, there's going to be a relief. For the traders that followed our magical analysis and traded the breakout here, at some point they're going to take some profit. And we know we're coming into a high volume level right here. So we know there's interest from the sellers that's coming in. So as a counter trend trader, this can be an area, right, where you look for those counter trend type of moves. We have 2 levels of structure, which makes it difficult, right? Because you have the overlapping deal happening. But this is where you start looking for your relief patterns. This is where you start looking for your pin bar, lower low, lower close reversal. I see a failed one right here, if you guys want to see it. Because guess what? These things don't work all the time. Not that it's necessarily in a great location, but you look for something like this. See that pin bar, lower low, lower close? It's a beautiful signal right there. Look for something like that. If you're more conservative, that's where you look for that double top. Add that CTS score. And you can look for a move back into our previous structure highs, right? Back down to at least 132.60s. We can bring a Fibonacci. Again, we don't know where this thing ends yet, so we got to wait till we measure the highs. But we can build maybe even a better case for our exit once we can draw our Fibonacci's and stuff in as well. But yeah, so we're coming into a crucial decision point here on Dollar Canada, where You can either look for that trend continuation, where that would require a break, retracement, and continuation up, or because you could do both, right? You can look for that counter trend trade where we hold that level and get a little bit of reversal. So I'm going to get this into our pro trade log. Let me timestamp it as well so you can go back and watch the video, 44.5. Any questions about this setup before we take our first break?